Johnson & Johnson is a dividend aristocrat that is currently trading at $145, and over the past year they are down by almost 10%. Now over the past 5 years they are down by 1.21%, which means that they are currently trading very near their 5-year low. So jumping straight to our stock valuation spreadsheet, I have already plugged in the ticker for Johnson & Johnson, and right away we can see that they have a dividend yield of 3.42% with a dividend payout of $4.96 and a trailing free cash flow payout ratio of almost 60%. So the company pushes the majority of their free cash flow into their dividend payouts. Now Johnson & Johnson also has a beta of only 0.5, which means that they are much less volatile than the S&P 500, the overall market. So now let's jump to the 9-pillar analysis and have a closer look at Johnson & Johnson's dividend. You can see that their 5-year dividend growth CAGR is sitting at 5.33%, which is great. But the one thing you have to understand is that the dividends are always paid from the free cash flow. And if we direct our attention to the left, the free cash flow of Johnson & Johnson has actually been decreasing at a rate of 2.59% over the past 5 years. So currently the company does have enough free cash flow to keep increasing their dividends, but in the long term, this is not a sustainable model. So the decreasing free cash flow is something you do have to look out for if you are planning to add Johnson & Johnson to your portfolio. Now, what I really like about the company is that over the past years, they have been decreasing the amount of free cash flow they have to push into their dividend payouts by decreasing their shares outstanding at a rate of 2%. So every single year, they pay out 2% less of their free cash flow in dividends. Now, the company also has fairly low debt. Their long-term liabilities over the 5-year free cash flow negative dividends is sitting at only 1.24, and they are very profitable with their 5-year profit margin sitting at 25.29, which is well in the range we like to see. Now, let's also have a look if over the past 5 years, Johnson & Johnson has been trading fairly valued. We can see that their 5-year PE ratio is sitting at 22.14, and their price to free cash flow is sitting at 21.31. Now, if we zoom into pillar 1, we can see that over the past 5 years, the PE ratio has actually been declining quite well, but recently it has jumped up to almost 24, which is higher than the 5-year average, but that is because year over year, their net income dropped by almost 60%. Now let's also have a look at the company's price to free cash flow, which as you can see has been increasing over the past 5 years. But the reason for that is that their free cash flow has been decreasing over the past 5 years. Currently, the price to free cash flow is sitting at 20.89, which is still in the range we would like it to be in. So overall, Johnson & Johnson might as well be fairly valued compared to the free cash flow and compared to the earnings they are currently generating. But let's figure that out and jump to our intrinsic value formulas. So first, jumping to the grams formula revised, I will plug in the 5-year earnings growth estimate at 7% and get an intrinsic value of $132.49, which is actually 9% lower than the current trading price. But let's jump to our second valuation formula, which is the discounting cash flow model. We will plug in the free cash flow over the past 5 years and calculate the future growth rate of only 2.3%. Now, when I plug in a discount rate of 6.3%, we will get an intrinsic value of $196.92. Now, for the third valuation model, I will compare Johnson & Johnson to its competitors and get an intrinsic value of $176.19. Now, finally, let's compare Johnson & Johnson to its dividends. I will project a future dividend growth rate of 3.5% and get an intrinsic value of $174.25. And finally, when we average out these 4 models, we will get an ultimate intrinsic value of $170, which is 17% higher than the current trading price. And with a margin of safety of 15%, we would get an acceptable buy price at $144.47.